the Trading College podcast. Thanks for joining us, and remember to subscribe for future updates.
Hi, welcome back to the very popular podcast here at Trading College. We're going to talk about spread betting. What is spread betting? The benefits, how I use spread betting to place my trades. And I want to talk about a little bit here where it started from back in 1970s, early 1970s, around 1974. Stuart Wheeler, the founder of the brokerage platform, the biggest spread betting broker platform in the UK, which is IG Index, the IG group. Stuart Wheeler, the founder, basically wanted to place some bets with his friends on the price of gold. So this is where it all started. It all started with IG Index, which we're pretty much a partner with. And you'll often see me on the TV at IG doing some technical analysis as well. So the great thing about spread betting is the big attraction is the tax-free on the profits. So if you are making a nice profit, so let's say you make £500 today in a trade, you can withdraw that money and you do not need to declare it to the tax man. I've been doing this. I've got to be careful what I say. You don't want to go around flashing your money, but you need to keep it nice and under the radar, because you don't want the taxman coming to you. But I have never met anyone who has paid tax on their profits if they're spread betting the market. Now, it is the gambling license that the IG spread betting broker is signed up to. And the gambling, if you're gambling in the UK, all the profits are tax free. That does mean, though, you cannot write off any of your losses or claim any tax back on your losses if you are spread betting. You have a spread betting account. Now, it's easy to open a spread betting account. You can go to any of the many spread betting brokers and go in there and open an account. There are requirements. You will need to go through a check to see whether financially you can afford to be opening this account. And they certainly have tightened up over the last 5 years, spread betting brokers, because of regulation and the compliance around people trading the markets that cannot afford it. So you're going to have to go through some application to open an account, and if you're honest and you give a spread betting broker all the information that they need around your wealth, your income, your savings, your equity in your house, then you should get that account opened. Speak to your broker if there is a hiccup at any time, or we'll gladly help you as a go-between with that broker. Okay, but let's just dive into now sort of the benefits. And of course, the big benefit is the tax-free on the profits. Everyone loves that. Who wants to pay more tax? I certainly do not want to do that. So I can use a spread betting broker. Now, many years ago, I started in 2004, remember, many years ago, spread betting was expensive. Things are expensive at the start, aren't they? And then when it gets more popular, more brokers start to open up, competition comes in, and now it becomes, the only way to sort of trade the markets, as far as I'm concerned, as in the short term. So why is it expensive? Well, the price between the buy and the sell, which is called the spread, many years ago was very wide. So for example, crude oil, the spread years ago when I first started it was 8 points. So 8 points between the buy price and the sell price. That's the spread. The price of oil had to move 8 points before I broke even. Now it's down to, and let me just look at my charts right now. This is out of hours while I'm doing this podcast, but the price of crude oil to buy and sell right now is at 42.44. Okay, so it's out of hours, so the spreads are a little bit wider, but once the markets open up, the oil market gets going, the spreads will tighten up to 1 point. So at the moment it's 2 points. In the old days it was 8 points. 8 points, guys. We're so lucky these days. Now, in the old days, when spread betting was, getting going, there was also other accounts called CFD accounts. And with a CFD account, all the profits you had to pay tax on. all the losses, you could claim those back. And the spreads were nice and tight, or the commissions were nice and tight. And so it was worthwhile trading with a CFD. Then the spreads with spread betting accounts tighten right up, so there's just no need to open any CFD account. And I've got a CFD account. I never use it anymore, guys. So the spreads were wider. Now they're nice and cheap, and you can trade any market virtually in a spread bet. There's thousands of thousands. I'm looking at a broker's account here with the amount of markets you can trade. There's like over 17,000 markets, and if you're trading with a broker like IG Index, then you can also trade small cap stocks in the US that go on the huge moves, Forex markets, indices like the FTSE and the DAX. You trade those commodities like oil, gold, the grains markets, and copper. It's vast. And now there's ETFs, exchange traded funds as well. Okay, and investment trusts, you can certainly do that. You can also do, I'm sure you're going to be a little bit confused here, but you can do option trading in a spread bet with IG Index as well. Now, we are partners with IG. I'm not trying to push them on this podcast. What I am saying is that they were the pioneers. They started it, and they are the biggest. So I'm sort of going to reference them quite a bit. Now, you can hedge your shares in a spread bet. So let's say you've got an ISA or a SIP pension, and you're long a stock, Apple, and you feel like the market's going to come down. People use spread betting accounts for hedging positions as well. One popular strategy is if you're long in your shares, like UK shares, FTSE shares, US shares, let's say you're long the market and you feel like there's going to be a correction. A lot of people will go and short the FTSE 100 as a spread bet and hedge the position. So as the market falls, they make money in their FTSE short trade. Now that's something we have not mentioned yet, that you can go long and short in a spread bet. Okay, so like if I was going to go long in my SIP or ISA, I couldn't go short. I could only go long in the shares. But with a spread bet, I am literally allowed to short the market and bet on the price going down. I don't like to use the word betting or gambling as a trader because I don't feel like I'm betting or gambling. It's very much calculated risk I'm using here. So there's plenty of markets to trade. You can go long and short, which is the flexibility that you can't do if you're using a SIP or an ISA. There are ways around it with ETFs, but that's for another video or podcast. Let's talk about the cost for using a spread bet. Now, if you're not familiar with spread betting, you go and place a trade with a broker, a share dealing broker. You'll probably pay a commission. I know Hargreaves are pretty expensive, and if I want to buy some shares in a company, I have to pay a commission. With spread betting, you don't need to do that. The charges around spread betting are between the buy and the sell. So if I'm going long £10 a point and the price spread is 2 points spread, then I'm going to pay £20 on that trade. Okay, and that's all I have to pay to get into the trade. Now, if you are holding a position in an account, then you are trading basically on leverage when it comes to spread betting. All you need to do is put up a deposit. So you need to cover the minimum deposit requirement for that broker to open that trade. And it's a certain percent. They love their percentages all over the website. Okay, so if you're opening a trade in a certain market, you're going to go in and you're going to place a trade. Now, you're going to place a trade with pounds per point. This is why it's really simple. People love it because I could go long £1 per point. Okay, it's equivalent to 100 shares if you're doing a share, but a pound a point is really simple. If the market moves up, or a market moves up 100 points, then I'm in and I'm long, and I'm in with a pound a point, I've made £100 profit. Really easy. But all I need to place that trade is margin. All I need is a deposit on that, because we are trading on leverage. So we are borrowing money short term. Don't think about it as borrowing it from the bank. They're giving you the money, then you've got to pay the loan back. It's not like that. To open that trade, I need a certain amount of money in my account, a deposit to cover the margin to open that trade. And then the broker then covers the rest of that position. Okay? So we're always trading on margin, we're always trading on leverage, and the leverage requirements, or leverage, the amount of money that we're borrowing in this short-term trade, has changed over the years. Companies outside of the UK will give you and borrow 100 times your position size, okay? But with the regulations that are tightened up recently, which I think has been quite a sensible thing, is that you're only allowed to have a 1 to 20, borrow 20 times in the short term your requirement. Okay, so your leverage requirement is 1 to 20. Now, the deposit only that you need to put up for trades is 5% of the position size. And that is standard across the board with all spread betting brokers, and that's pretty much with the indices. If you're doing something like FX, it's just over 3%, depending on the currency. Commodities 10%, 5%, and shares is a 20%. So you need to put up 20% of the position. If I was doing this with my normal share dealing account, I'd have to put all the amount up, wouldn't I? 500 shares, multiply that by the share price, I've got to put that total amount up. I've got to give the broker that amount, because what happens then is the broker holds the position, and what happens is that somebody else on the other side would sell me those shares. So there'd be another trader selling me those shares. I'd buy it, somebody else would sell it. With spread betting, it's not quite like that. With spread betting, you are trading on the opposite side as the broker. Okay, so if I go long a currency pair, euro dollar, or a share, I don't know, I'm just looking at my list here, GameStop or something, through IG index, then I'm trading against them. There is no other side of the market. And so what they need to be doing is holding all of their client accounts in a separated account, because then they do not, and companies have been hammered by this over the years, and a couple of brokers went bust. They would pay traders out of other traders' losses, and that is never very good. And we're seeing that happen in funded accounts this year, which is not good. And funded account brokers are starting to go bust because they're paying out people. So if I win, you might have lost a trade. I'm going to take that. I'm being paid out by the losses from other traders, which is not good. You need to have the broker needs to hold your funds in a segregated account. All right, so we're trading with margin. We're borrowing money to trade. It's leverage. It's short term. Now, with borrowing money, there's never a free dinner or whatever, because they're going to charge us interest on holding that position overnight, and you'll see in your statement a small amount of interest. As long as you're making more money than you're paying on interest, then that is okay, isn't it? And you've got all the tax-free benefits as well. So if you're holding overnight a position, and there'll be a cut-off what time that is, normally at 12 o'clock midnight, then you are holding a position overnight. You will be charged overnight interest charges. Now, that's because you've opened a daily funded bet, which is a bet that you're looking to close down at some point. But if you open a daily funded bet, and you'll see that in your broker, that means you're holding the position in the short term, and you've opened a bet that basically you're going to be charged every single night. Now, the way to get around that is to open a bet or a trade that the broker provides you with that is a future. So down the line, a date down the line, which is determined by what the options they give you, might be the next business quarter, on a standard spread bet, the costs will be all in up front. So the spreads will be wider. Leverage will be the same, but the spreads will be wider. They'll charge you up front. So instead of having let's say a 1 point spread on a daily funded bet, the spread now for holding for the next quarter might be a 4-point spread. All right, because you're trying to give it longer time for it to play out, and hopefully over the period of time that you're looking to hold this market or this trade, that you're going to make more money than the 3 or 4 point spread that you're being charged extra. All right, so the charges for futures are upfront, and the daily short-term ones are charged overnight if you don't close the trade down before overnight. So if you leave it for a couple of days, it's not going to cost you very much. Day traders would likely to close the trade down before the end of the day. All right, so there's no commission. You've got the spread and you've got the charges to happen overnight. There's lots of out of hours trading access as well, which is great and very popular this year. You can trade Apple from like 9 a.m. in the morning, and that's a US stock, of course, but that normally opens at 1 p.m. in London time, which is the pre-market in the US. But they do have a price IG index which is called out of hours, and you can trade Apple and quite a few other US companies, and basically they've got some algorithm that's creating a price based on the underlying market. And all these markets that you're trading, as I said, 17,000 of them, all these markets are derived from an underlying price. I'm not actually owning shares in Apple. If I buy £1 a point in Apple, 100 shares, I don't have any rights to vote in. I don't own any shares in the company. I am basically trading against the broker. Okay, I'm trading on the price going up or going down. So I think Apple shares are going to go up. I need to buy at £1 a point. I've got some leverage, and I need to put a deposit in. If I've got £1 a point, the price goes up. I make multiples of the points that it's moved. All right, and the broker pays me out. I can withdraw the money whenever I want to. Some brokers will have a 24 hours payout, but if you're with one of the big brokers, then they'll pretty much pay you out very quickly, unless it's hundreds of thousands. I'm sure there'll be some sort of 3 or 4 day delay, but it's a lovely feeling taking the money out of a spread betting account, paying yourself. It goes right into your account. You can do what you want with the money, which is fantastic. So let me just have a little look to see whether I've thought of anything else around spread betting. A few other points that I've wrote down here. There's no stamp duty, of course, because it is a bet. There is a client money protection regulated by the FCA. So if the broker did go bust, you got I think it's around 80,000. You got protection with now. So that is very nice indeed. Just to I know I've had a broker go bust on me, guys, many years ago. I think it was called Weld Spreads. They were an Irish broker, and they were paying me and other traders out of client funds, which is never very good, to get some money back from those. But if you stick to the big brokers, then I don't see a major problem happening. IG, a huge group now, they've just bought out a options brokerage out the US for a huge amount of money, and they are listed on the stock market. So the things that you need to think about, the good things about spread betting are it's all tax-free profits. You can go long or short. You can trade over 17,000 markets. The costs for trading are really cheap. You're trading on leverage, so you're borrowing money to trade, so your money goes further. There's no commission to pay. There's no stamp duty to pay. You're betting against the price going up or down, and your broker will pay you out. Okay, that's it. And a lot of people, will look at the spreads as an indication whether to open a brokerage account. I would look at the spreads, see if they're nice and cheap, but I'd look at customer service, make sure they answer the phone, because when you've got a question, nobody's answering the phone, then that is a concern. But the the big brokers should answer the phone. And a lot of the brokers as well will, of course, have chart platforms or chart packages alongside their dealing. All right. Hope it helps, guys, and speak to you soon. It's a 20-minute podcast, but that's the ins and outs of spread betting, and it's great. I love it. Speak to you soon.
The Trading College Podcast. Thanks for joining us, and remember to subscribe for future updates.